Hello everyone, Andrew here, and this video is gonna be really nice for you if you have trouble with counter trading, if you're over trading, and if you wanna catch that really nice sniper entry. This video is gonna bring you back to reality and show you how it's actually done, how you can actually catch a counter trend, and how you will know if supply or demand is in control. So first of all, let's talk a bit about supply and demand. How do we know when supply is in control or demand is in control? The best way to actually find out is to go on the 4-hour time frame on 1-hour time. The reason I use the higher time frames like 1 hour and 4 hour is because they do dictate what price does. As traders, especially smart money traders, we tend to go on the smaller time frames and get lost in them, trying to usually catch counter trend trades because we see like price going up, so we want to catch the reversal, and then price keeps going up and up and up, and when it finally decides to reverse, we already took too many losses and we're not taking another trade. If this situation sounds familiar to you, then this video is probably for you. So the way to do it is just to watch order flow and watch the recent supply and demand on the 4-hour time frame. So let's take this Euro USD example and see the recent structure, okay? So let's find out the low which caused this high right here. The low that caused that high is actually this right here, the swing one, and then we have some smaller substructure here, which is probably on the 1 hour. So if you mark the high and the low, how can we actually find out inside this like consolidation, because it does look like a consolidation? How do we find out which is in control? And this is where we actually go down on the 1-hour time frame to watch more structure. And what do we have here? You see how we have this big bullish move right here. What caused that? This demand right here. So what did price do? It did come back to the demand, and now let's see if it gets respected. It does, and it actually makes a new break of structure. Every time price makes a new break of structure, it usually does give a retracement in order to mitigate, come back to the demand or supply zone that caused that break of structure. In this case, price came back to this demand right here. What did it do? It respected it, and then it headed towards the high. So what is price going to do? It's gonna make a new break of structure. This is how structure actually works. It's really simple, you don't need to overcomplicate it. Now, if we look at the next break of structure and what caused it, you see we have actually this area right here that caused the break of structure, but we also have an unmitigated one right here, right, as an extreme. And what does price do? After the break of structure, it returns to this area to mitigate it, gives a nice reaction, and then goes to the lower demand area to mitigate this one while still holding that bullish structure. Why? Because this is the low and this is the current high. So let's watch what price does. It does react, and then it makes this high right here above this structure. So it's a break of structure on the 1 hour. So what does price do? It returns to the demand area, comes back, mitigates it, and then it's heading again for the high. What did it do? It just created a new break of structure. So what is price going to do next? It's gonna come back to mitigate the demand that caused that break of structure. And we have this area right here, and then we probably can take this area as well as an extreme zone. The point of this video is to actually help you guys escape those counter trend losses, because I know I've been there. I've tried to take counter trend trades. Like in this situation, if I was like, let's say 2 years ago when I first like really started to get into trading, I will probably take a lot of sells, a lot of losses in these areas. Why? Because I see price going up, so I want to sell it. So first area, I take a sell, I take a break even, then the next area comes, I take a sell, I lose the trade, then I start looking for another area where price can react. I have this area, I take another sell, I take another loss, then I'm waiting for the next area, which is, let's say, above this liquidity, this area right here, and you can see price didn't touch it, and it actually gave a nice bearish reaction. So now what will I do? If price does return to this area, I will probably just take sells again and lose the trade because price didn't switch order flow and price didn't complete its objective. So what I'm trying to say is stop taking counter trend losses and do this simple trick that I do in order to catch trades. Only take a counter trend trade if you have a major, and by major I mean 4-hour on 1-hour structure, break of structure. So let's take a look at this simple bullish order flow, right? What do you notice? You see that every time we make a new high, we have a bullish move. What happens after you make a new high? You have a retracement, mitigate, creating a lower high, right? Basic structure. Then price starts heading up because it respects this low, comes towards the high. What's gonna happen? Probably that high is not gonna hold because the low did hold. So if the low holds, then the high is gone. The high is weak, right? So what does happen is a new break of structure, a new high being made, or a higher high as it's called. So what does price do after making a break of structure and a higher high? It has a retracement in order to mitigate some areas and create that lower high, correct? If you see the low being respected and price starts heading to the high, are you gonna take sells here? probably not, because that's really dumb idea. You'll probably take losses. So what you wait for instead is for price to create a new break of structure, create a new higher high, and wait for the retracement down if you want to take a counter trend trade. You see where I'm going? So only look for counter trend trades after having a break of structure on the 4-hour time frame or the 1-hour time frame at least, because the bigger the structure is, the bigger the time frame, the bigger chance you have for a pullback or a retracement, and you can take a counter trade. So after making the break of structure, you usually have confirmation for that retracement, where you can take some, in this case, sells in order to mitigate the area and see if the low holds, because there's also a chance that price is not going to do that, and what it will do instead is give a nice reaction, break the low, and then retest, and then continue lower. And then you will have that swing sniper entry for the big sell move that's going to happen. But usually you want to take profit here in case price creates a new higher high. So for me, this was actually game changing, because I really stopped taking any counter trend trades unless I do have that break of structure on the 1-hour, 4-hour time frame, and then going down on the time frames to see those confirmations. So in this case on EU, let's take a look on the 4-hour, or actually let's go on the 1-hour. So you see here how the recent structure was just respected, new high, respected, new break of structure, respected, and now we created a new break of structure. So what does price do? It will probably come to this area to mitigate, to create a new higher high. You see the perfect, is the exact example that I showed you earlier. Higher high, mitigation, higher high, mitigation, higher high, mitigation, higher high, right? So that's a really good structure that you can play off and you can take trades. So now what we want to see in this specific scenario, because we just made a new break of structure right here, we will probably have a retracement down to these demand areas, and now we can take sells. The next point is to wait for a session to actually take a trade. So if you watch me for a long time, then you probably know that I really use sessions as a really big influence in my trading. That's because I think that there's only 2 or 3 moves in a specific day, usually during London, then New York, or through New York Open, which is 1 hour after New York Open, or actually just New York Stock Exchange. That's when probably you'll have a big move. So if I see London going long, like in this case, London did make a break of structure to the upside and then starts retracing, what I will expect from New York is to actually potentially take a new break of structure to create that 4-hour break of structure and then start pulling back to these areas. So that's what I'm waiting for a counter trend trade. I don't want to take counter trend trades during and between the sessions, especially after a big move that happened. I don't really want to do that. I only take counter trend position after London close, which is 3 hours after New York Open, or just during New York Open during a session. This is actually a short trade that I tried during London Open, just for that reason. So I'm gonna break it down really quick. You see we have this area right here. We also had the 1-minute POI inside that area, which was really nice. Let's mark it down. It was this one. So yeah, so it was that one. And now let's look at structure and let's look like, why did I actually want to take a shorter? First of all, I wanted to take a sell because of point number 2, which is like the session was near. So you see how Frankfurt Open had this nice push to the upside, and usually Frankfurt Open, when it does that, it sets up London for another trade. So I was kind of expecting a short-term sell position. So you see how Frankfurt came to that. POI 1 minute gave that nice change of character, took liquidity, then caused the change of character. It came back to mitigate this area, created a new break of structure, and this is where I actually took the trade because I saw the second break of structure right here. So let's mark it down. I saw the second break of structure and then I waited to see if price will mitigate some of these areas. This is where London Open came. Price dropped to this area and then it came back to that supply and then gave a nice reaction. This is where I actually took the trade, having a really small stop loss. Unfortunately, I didn't close at a 1 to 5. I wanted to see it go down and then I took a break even. But you see how big of a chance you have to actually catch a counter, because this trade was really risky just because price was really bullish and I was expecting that break of structure to happen, right? I was expecting the break of structure to happen because looking at the 4 hour and the 1 hour, I could see structure shifting because this demand was respected, so price was heading for the high, which turned weak, and price wants to make a break of structure. So I knew that that's what the higher time frame want to do. So I just wanted to take a quick intraday trade, which unfortunately I didn't close in time. Took a break even and then price starting going up. So now in this case, what do? Well, it's really simple. You just stop trading until the next session, because as you can notice, price came back to, let's go down 5 minutes. Price came back to this area right here, which was in Asia midline, another trade that I teach in my mentorship, which you can take in Asia midline, and price just skyrocketed for like 50 pips, which sucked because I honestly made a mistake in this particular scenario because I was expecting another thing to happen. I expecting this short maybe play out under the Asia range and then have confirmation for that push. It did react from the Asia midline, which I wasn't paying attention to, and I missed the move, but it's all good because now I know what the next move can be. And that next move is going to be at next session, which is in about 30 minutes my time, which is New York session. And what I want to see is, if we're looking on the 4 hour, I want to see this high being taken and then maybe a retracement to this area or that area in order to continue higher. And this is another point that I will probably talk about in my YouTube videos, is which is candle closes, candle bodies being formed and how important they are. Because looking at this candle right here, I know that we to probably reach down a little bit more and then probably flip and going up, and that's another good confluence that I have in taking a trade. Here I took the short because price was going up. We did have those bearish reactions, price looked like it wanted to mitigate and then flip to go to these areas, which it didn't really happen, but it's a really important thing to know. And now looking at the 50-minute, again, we don't really have any bearish structure, so I'm not gonna look for a sell. If I was trading 2 years ago, if it was the 2 years ago me, I would probably start taking sells in these areas and take losses, because what price will do is probably take the high, make a new high, and then maybe during the end of the session it will give a retracement. So structure is really important, and understanding how to actually read the structure is really important. All you have to do is go down on a 4 hour, 1 hour time frame when you get lost into your zones, see what the order flow is, see if you have supply or demand in control, and then only look for counter trend trades if you have a break of structure on those specific time frames. Unless you do, then just look for continuation trades to complete that objective, which is creating, in this case, a new higher high, and then look for the new lower low, lower high, or the reversal trade, create a new higher high. So that's how you should actually trade. And if you actually pay attention to what I'm saying here, you will probably avoid a lot of losses. I know I have personally avoided a lot of losses, a lot of stupid counter trend trades, because everyone takes counter trend trades, because you see price going up and up and up and up, and you just want to catch a trade. So the only way you can catch a trade, because price is moving so aggressively to the upside, can't really take buys because you'll have like a big stop loss. You want to catch that reversal and catch some pips. And what usually happens is you just take loss after loss after loss, and when that retracement actually happens, you just over your loss limit. If you're trading a funding account properly, you reach your daily drawdown limit, so you can't trade anymore, so you just lose. So to end up this video, just wait for structure to be completed, wait for the objectives to be completed before trying to take a counter trend trade. Always wait for the major break of structure and then look for lower time frames to see that reversals, and also use the sessions, because you usually have 3 big moves in a day. So this was the first move, right? First move. The second move is probably gonna come in New York, which is gonna be another bullish move, and then you'll have after session where we'll probably have a small reversal. I'm saying small because price is still really bullish. After this big engulfing 4 hour candle, for me this high is going to be gone, and then maybe having that retracement. Until then, I'm not taking any trades. Maybe I will look for a buy position in New York session. You see how we're reacting from this area here. So if that holds during New York session, that's gonna be a good buy for the high or even higher. So thanks for watching, guys. I hope this video has helped you maybe avoid some future counter trend losses. If it has helped you, just as usual, like this video, subscribe it, and just press the bell notification if you want to be notified when I post another video. I'm gonna continue pushing trading videos for you guys, even if I don't get that many views. I know that it helps a lot of you guys, so I'm happy to help. Also, don't forget to join our free Discord, where we sometimes post outlooks, charts, and we talk with you guys freely, trying to give tips as much as we can so you can become a better trader. See you in the next video.